Welcome to the Stockout Trade War Edition. I am one of your hosts, Mike Bowden-Distel, joined by Grace Sharkey, who probably spent the weekend stocking up on tequila. Am I right about that?
Yeah, that Corona is all those favorite things for sure. Try to get them in last minute, but I don't think all of it crossed the border in time.
Yeah, so a lot going on today. Market's selling off. We have a lot to talk about with tariffs, and then just a lot going on. Just busy time of the year with earnings season. So we'll talk about some of the high level takeaways there. And for anyone who's not already signed up for the newsletter, want to make sure you know how to do that. Just go to www.freightwaves.com. Up at the top under newsletters, the second one there under market insights is the Stockout. You can also join Grace's community fraud watch, which is the second one under trending now. And we're going to talk a little bit about one of the product types that's been there's been a lot of theft. Legos has actually been a hot area for thieves to steal, believe it or not, because they are valuable and all that. So we'll talk about that a little bit later. But first, we'll talk a little bit about the tariffs. Feels weird to not do the show without saying something about the tariffs. So as far as what this means for CPG and retail, we have some thoughts there. There's a ton of content on the site. A lot of this is written up by Noy Mahoney. He must be really busy these days. He has one on the cross-border trade there, another one on Mexico and Canada striking back, et cetera. I think he's writing up what's happening with the stock market, this morning, which it's down pretty heavily. And so Noy, we're keeping him busy. Must be pounding the Red Bulls there. But basically, we do have the 25% tariff on Canada and Mexico, additional 10% on China. So those are our three largest trading partners. Canadian energy is only going to be tariffed at the lower 10%. So a little bit sensitive to what that does for U.S. gasoline prices. And there's not going to be any exemptions, which was one thing that had previously been uncertain. Includes a clause that allows the U.S. to raise tariffs further if Mexico and Canada retaliates. Well, they are retaliating, so we'll see if that comes into play. Canada already talked about what they're going to do, which we'll talk about, but Mexico is a little bit uncertain. And they seem to be aimed at pressuring Canada and Mexico into negotiations on migration, drug smuggling, reforms to the USCMA. So it's kind of everything. The concept of that everything is a negotiation for Trump seems to be coming into play here. And some additional sort of background on this: both Canada and Mexico send about 80% of their exports into the U.S. The Pearson Institute says the U.S. inflation could potentially be about half a percentage point higher with the tariffs. So taking it from, let's say, 2.9% to 3.4%. A group estimated that Canada's GDP may be hit by 3% as a result of these tariffs, and Mexico's GDP hit by 2%. So it's not really something those countries can't afford. So they're hoping for a swift, resolution there. And then some of these stats on U.S.-Mexico trade were kind of interesting, just how quickly they've grown. So U.S.-Mexico trade growth was 6% year over year. In the first 11 months of 2024, it was about 2% between Canada and the U.S. So the U.S.-Mexico trade growing about 3 times as fast as U.S. to Canada trade. Then Noy had some quotes from some companies in there that say they just really can't make any changes, near term based on what's happening with these tariffs. Sunset Transportation, which deals with a lot of these issues, says it really hasn't slowed down the cross-border trade. They're still seeing a lot of growth in Mexico manufacturing, using Laredo as kind of the hub for warehouses and distribution for imports coming into the U.S. Nestle plans to invest $1 billion in Mexico. I presume that's a lot for U.S. Consumption. And so some of the products subject to tax, Canadian lumber, which is a big deal for the railroads. A lot of Canadian lumber comes from, the forests in Western Canada for U.S. home building. A lot of autos go back and forth, parts go back and forth. A lot of produce, fruits and vegetables, toys, which we're going to be talking about later on. About 80% of toys are manufactured in China. Maple syrup, tequila, avocados. A lot of your Super Bowl gear comes from Mexico. A lot of appliances come from Mexico, including some of the TVs, so even more Super Bowl items there. And frozen French fries come from the U.S. Natural gas could have an impact on some of the heating bills in the Northeast. So, we'll see what happens there. I think some of the unanswered questions here is just the duration. Sort of never underestimate Trump to just declare victory at any point in time if he gets some concession on what he's looking for from Canada and Mexico. So hopefully this is kind of a shorter term thing, I think, for most people. There's a quote from this George Gonzalez Henrickson, co-CEO of Nearshore. He said he doubted the tariffs on Canada and Mexico would be in place for very long. So it is something where you can't really just change all your supply chains because you have these tariffs in place. I think you sort of have to wait out to see what's going to happen. And then we don't know also the degree of the regulatory tariffs. Canada is talking about imposing a 25% tariff on its own on certain items like alcohol, coffee, furniture. It sounds like they're going to have a second wave on things like motor vehicles, agriculture, steel, aluminum. And then they also talk about having kind of this rotating tariff plan in place where they go from one category to another. And then, Mexico's considering retaliatory tariffs also just don't really have all the detail yet. So a lot of background. I think for the CPG industry specifically, if there are ingredients that come from these countries that they use in their packaged goods. I mean, a lot of the packaged goods are manufactured in the U.S., but if there's ingredients coming in, that's going to pressure their costs, and it's not something that they can immediately pass through to retailers because they have agreements in place with the retailers to have them at certain prices for a certain period of time. So if they persist, they could go to the retailers and ask for a higher price for the store shelves, but not immediately. For the retailers, I almost wonder if the 10% tariff, and Grace, I wanted to get your thoughts on this, if 10% tariff is maybe a relief because during the campaign, Trump was talking about a 60% tariff on China, and the retailers are just sensitive to things like the clothing, shoes, all those things, toys that come in from China. And it seems like it could have been worse from their perspective.
Yeah, I think you had brought this up too in notes that the NRF does sound to be a little bit, I don't want to say more positive, but maybe less aggressive in their stance towards the tariffs. So, it's interesting to kind of tie this back a little bit to who we're talking to in regards to Trump. I was over the weekend kind of looking at the main points of one of his biggest books, right? Art of the Deal. And if you kind of go through those and see how he not only focuses on using leverage, being loud about it, fighting back. Of course, I think we're in that stage if we're talking kind of the stages of the deal when it comes to Trump. I think you're right. I think that this is a negotiation period. I'm hoping and agree with Jorge that it's a situation that hopefully doesn't last long. And I think showcasing, right, that 10% tariff in China, I think shows that there is negotiation in there. I feel probably more positive about the negotiations with Mexico over anything. And I agree with you. I don't think people are going to shift out of Mexico. I think a lot of the discussions we've had on this show and at FreightWaves have shown that companies are invested in and how they're manufacturing and leveraging Mexico for trade in particular, and kind of bringing things back here to North America. And I think Trump realizes that, and I think those around him and those who he's close with would probably push him on that stance too. I think maybe the fentanyl argument is a little bit of like the loud side of the art of the deal, if we're going to point to that. I don't think that this would be necessarily the best way to, of course, eliminate that factor. But again, I think it's a point to showcase he's using leverage in this stance to make sure that, from his perspective, America comes out on top. So how long they'll last, that's tough. I mean, it sounds like he's, quote, not taking calls when it comes to Canada, so that's not the most positive, but showcasing, right, the importance of our trade partner with Mexico, and again, a little bit more on the manufacturing side, and seeing so much investment that we've placed in that region. I'm confident that we'll probably see I don't want to say turnaround, but a better discussion between Mexico than we're seeing with Canada at this point. But I do think this is temporary. I would hope that by the time that this is negotiated through, that we kind of avoid the inflation that could potentially come from this. And looking back, we did see a lot of movement even with his negotiations in his first administration with tariffs as well. Some positive things did come out of that. We saw some improvements in the steel and aluminum and U.S.'s competitive edge, which could also be a discussion looking at what's happening now in that arena. But yeah, I think that we're looking at an art of a deal situation here in particular. And I'm not surprised to see that we aren't seeing huge movements from players, but it's going to be a tough, I think, probably 6 months or so as we work out these things for CPG and retailers in particular. But you're right. There's just so many years that go into these deals. I highly doubt we're going to see huge pivots from individuals right away. And hopefully this gets cleared out before we start seeing huge impacts on consumer pockets.
Yeah, I mean, the one place there maybe has been a pivot has just been the degree of imports and when those have been taking place. We have a sonar chart
Yeah.
on the inbound ocean TEU volume index, and there is evidence here that companies were moving imports into the United States earlier than they otherwise would have. That green line was 2024, and it was trending for the last sort of several months about 15, 20 to 20% above where it typically would be. And a lot of that was concentrated at the ports of LA and Long Beach. And then you see even, the white line 2025, just kind of an early start. I mean, some of that's just Chinese New Year, a little bit earlier Chinese New Year, but imports continue to be at a very strong level, before potential tariffs. So we'll see what happens there. I'll keep you updated on the Stockout, and I'm sure Noy will have about 5 articles a day on tariffs. I want to move on to the next topic, which is really hits the biggest retailer, Amazon. So UPS walks away from about half of its Amazon business. And what do you know? Noy wrote this one up too. So UPS and Amazon came to an agreement that they're going to slash the volume by more than 50%. UPS has been had a stock that's really been under a lot of pressure. It's down about 40% the past 3 years, and they had a major one-day drop last week, down about 14% on Thursday. So some really underperformance, both relative to FedEx, its primary peer, and also the broader markets, of course. And so this reduction in volume that UPS is going to move for Amazon is going to take place by the second half of next year. It's part of the carrier's plan to deliver more profitable packages. So Amazon's UPS's largest customer by far. It was about 11.8% last year, according to its SEC filings. And Amazon reportedly makes up 20 to 25% of the volume in the network. So it's really disproportionately unprofitable for UPS to satisfy Wall Street. You need to have the margins going in the right direction, not the wrong direction. And e-commerce is growing so quickly, so they do need to take a little bit of a different tactic. I mean, so some of the alternatives you could have would be things like moving packages for medium and small businesses where they could charge a higher rate, doesn't have the leverage that Amazon does, and things like healthcare materials, which are more time sensitive, those would come with a higher rate. And then Amazon has its own logistics network, and believe the idea there is Amazon moves its sort of base load of packages that move every day in consistent lanes through its own network, and then uses third parties to deliver the packages that don't fit neatly into that network that would reduce their own efficiency. And then the third parties, though, take on some of that inefficiency. So UPS doesn't seem to want those packages either. As to the full extent that they had before. And then UPS also announced a closure of about 10% of its buildings and a reduction in the size of its vehicle and aircraft fleet, and a decrease in the size of its workforce. So it's interesting that this follows on the big Teamsters, what the Teamsters would declare as a big win, but you wonder if it's as much of a win if the company isn't also doing well and it's ultimately leading to job reductions.
Well, you mentioned it too. I mean, just overall volume, UPS is looking to drop. I think it was this year about 8.5% year over year, and we've talked about on this show too that I think a number of companies are seeing more back to store. I think people are purchasing less in particular. So we see less packages moving. I think that's why we talked about a few episodes ago, right? The return aspect, the return policies for a lot of companies has changed to be less positive and for that experience. And I think this is especially for UPS, a smart, maybe more long term approach to that problem. I mean, Amazon as well is continuously adding their. I think Amazon Relay, right, more and more third party vendors to help build out their network. So you're talking about a customer that does bring you a lot of revenue, that's for sure, but doesn't bring you the best profit in long term. It will fall off, and that but will still be there, could potentially be taken over by their own logistics network. It's probably a smart thing to consider as they continue to grow that out too. So, um, not completely surprised by this. I think, right, we've talked, FedEx has brought this up a number of times, looking at their different verticals and figuring out, what's a good customer and what's a bad customer. And funny thing about logistics is it's easier than you think it is to become a bad customer for a company, and that's what is so great about this market being, or this industry being so fragmented. Is I don't think Amazon will hurt in the long run, and it will be better for UPS and likely its stockholders. And you're right, to your point, to the Teamsters that they represent as well. So, again, in the short term, it's definitely going to probably feel like a hurt with that 11% of revenue from last year. But I think more long term, it's likely more a smarter decision and something that I would hope that the Teamsters can understand and see. There's a number of statistics behind it to showcase this is probably better for them, and a better opportunity for them, right? You want higher profit, a better chance of negotiating higher raises and better benefits in the future too.
Yeah, and another company that's involved in a turnaround also reported earnings last week. Norfolk Southern, U.S.
Yeah.
Eastern Class 1 Railroad. And Norfolk Southern, his new CEO has a new board. Half the board is there within the last 18 months. 3 of the candidates were nominated by that Ancora Holdings, the investment firm, the activist investor. And the idea there, so this what we're showing on screen now is one lane from Sonar that would run on Norfolk Southern. So that's shows growth in domestic intermodal volume, containerized volume between Chicago and Atlanta. Norfolk Southern's headquartered in Atlanta. All the railroads have big presence in Chicago. Norfolk Southern's facilities on the south side there near Inglewood. And so Norfolk Southern is trying to take its operating ratio, which is inverse of operating margin, 1 minus operating margin, going from 66 to 60% to basically take it in line with industry standard. They're doing this about 150 basis points a year, 100 to 150. So they say it's going to be at the top end of the range, 150 this year. Actions such as running the trains faster, gaining more employee productivity. And I include all of this in the Stockout because I think some shippers should be a little wary of that, because sometimes when railroads undergo turnaround, service can suffer. So it's one to watch if you either use Norfolk Southern directly or use JB Hunt in the East or Hub Group in the East, because both of those domestic intermodal companies will use Norfolk Southern as the underlying rail provider there. A couple other thoughts on earnings. As Zach Strickland and Craig Fuller brought up during the State of Freight, some of the asset-based carriers a little bit more positive on the market than the non-asset-based carriers. Part of that's because the spot rates are rising, which is positive for outlook for truckload market, but sort of the near term for brokers can cause their margins to squeeze. They're largely buying more or less in the spot market, and their sell rates a little bit closer to the contract market. So you do see that spread narrowing, which we've written up in the site. And then Arkansas Best, or I guess what they call it ArcBest now, volume a little bit sluggish, tonnage per day down 7.3%. Shows a little bit of a weakness continuing in the industrial sector, which is something we've also seen in the railroad, something that's also holding back the railroad volume. So those are a few of my takeaways from earnings. Did you have any in addition?
No, I don't think I have too much to add there. I will say, for everyone watching, I know you're going to be on the radio show tomorrow as well. So I'm likely we'll go through some of this too in the intermodal side. So make sure you guys check out our radio show where we dive into some of these topics a little bit more too on SiriusXM's Road Dog Trucking Channel, channel 146. But Mike, I think I just have just enough time to get into our new segment too, which is our Who Asked for This. We talked last week, which was, I love this because there's just so many weird things I think happening. We talked about the CPG side and the retail side. And of course, we got into some interesting collaborations last week. And this next one I think is funny, especially for our audience, those who are fans of Dooner Show. Probably this comes up a lot, but last week, we found out that Lego actually might be having a new big competitor. One that's kind of already in the space. Good old Mattel. Mattel came out last week at a Germany toy show, which, hey, maybe send me to that next year. We'll think about it. A Germany toy show, they came out saying that they are going to be releasing actually in May their new brick shop. This is going to be their extra competition towards Lego. You might know actually that Mattel does already have a partnership with a blocks brand. It's called Mega Blocks. And I didn't even realize this, Mike, but I spent some time this weekend researching it. There are some big Mega Bloks fans out there who have a lot to say about this, and they're pretty excited. This is what they say is Mattel's way of disrupting the status quo of building toys. So, for those out there, just to kind of give you an idea of why they would be going after this market, well, in 2023, the market value of building block toys, in particular Legos of that sort, was about $14.7 billion. And that's actually projected to get up to about 11.9% compound annual growth over over the next 5 years alone. Now, of course, they're seeing all of the wonderful Legos journeys that we're all on right now. If it's not the Disney adult, you're a Lego adult, and we're seeing more and more older generations getting into Lego. The first half of 24 alone, Lego reported a 13% increase in sales. Of course, they're reaching about $4.6 billion Lego itself in revenue. So to kind of showcase how far behind Mattel is on that, they actually saw a 1% decrease in their Mega Block sales last year. And they actually have some really interesting partnerships. Pokemon, Microsoft, and a number of like Xbox games use Mega Blocks to, as you see right here, which is so cute. Who doesn't love a nice Pokemon Stadium game? But the problem is, and this is what the point of Brick Shop is if you look at this image right here, it is difficult to take that apart and to have fun and build something unique on your own because the parts aren't very customizable, and there's a lot of unique pieces. If you're a Lego fan, you know that they can take like a little mini frog and somehow make that frog not only a frog but the inside of a flower or something on top of a building. And there's just unique ways that Lego works to make your Legos work for the set that you buy, but also just for your creativity and customization. And that right there is what Mattel Brick Shop is going to be focused on. I will say I watched a number of Mega Block, like I said, influencers, you could say, this weekend. They're pumped about it. Apparently, this is going to be really cool compared to the Mega Blocks brand that they're used to so far. A bunch of people got to play with them. They had to sign a bunch of NDAs, so we don't know much about like what exactly maybe their shapes will be like and how customizable the first set that comes out in May will be. But what's I think really interesting is how can they we talked about this before, how can Mattel continue to expand its merch sales past the movies that it's been putting out? So for instance, Barbie, right? Could we see some really cool Barbie Legos, or sorry, Brick Shop bricks coming out for the Barbie brands? There's talk talks of a Thomas and Friends movies coming out, a number of Hot Wheels movies coming out over the next couple of years. And how will they now use that to, of course, expand in their building blocks toys? I think that's a huge market. Now, there are some talks that some of the brands haven't been happy with their Mega Blocks partnership and what they've put out. So this could just be kind of just a rebrand. Hopefully it lands well. But for all of those Lego heads out there, you asked for this. You, of course, have been spending all that money at Lego. Dooner out there, you bought all the trucks. Will Dooner continue to buy Mattel Legos at the brick shop? I guess we'll find out soon. But for this sake, I signed up for the newsletter. We'll see what they end up coming out as. But this could be a huge win, I think, for Mattel if they can actually make this work.
Do we know if they're going to be priced below Lego? Like, I mean, are they going to be right at parity? I can't imagine they're going to be above Lego.
It's interesting that you say that because I would assume it's you would assume that if they're focused on this like customizable set, right? So they're starting to make pieces probably more in volume, right? And then like place. I would hope maybe that would bring down costs because now each set has like these really oddball parts. So I'm sure it has to do with some of this as well. Just something that they can maybe volume wise. I don't want to say print out, but manufacture and put into different sets. And they do have a number of brand names already under their Mattel uh, uh, portfolio. So they're not going to have to worry about, I think, setting up a bunch of new partnerships. Uh, I would assume probably about the same price. Maybe they make them competitive to begin with. Legos aren't cheap either, so that's going to be interesting to see. But yeah, well, like I said, I signed up for the newsletter, so once it comes out, maybe I'll grab one and we can see if it's worth it and if the price is there too.
Very interesting. Yeah, you have to check that out. My son did get one of the Mario Lego sets for Christmas, and it was probably the
Yeah.
highest quality toy he has. I mean, if you drop the thing, he says, "Ouch!" He makes all sorts of noises from the game with the Lego. So it was pretty creative, actually.
Love it. Well, hey, maybe we'll see. We'll get him a nice set here from Mattel in a little bit. But I think that's it. I think we're over our time here. So for our audience, make sure that you sign up for our newsletter, the Stockout. Head over to freightwaves.com, click on newsletters, and sign up for that. Sign up for Fraud Watch too, and we'll be back next week. Until then, hope the stock market stays well and tariffs work itself out too.